Unlocking the power of Medicaid irrevocable trusts. Cushing and Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Ben with you here today, and kicking things off on what is a light news day today, but the last couple days have had quite a bit that we didn't get a full chance to recap yesterday because of the Juneteenth holiday. And so, Mike, I think we're going to kick things off today talking about the Fed, because we had a Fed meeting that concluded on Wednesday afternoon. So we got Fed policy, we got Fed economic projections, and we got Jay Powell in the purple tie once again. Where would you like to start things?
Let's just start right with the press conference and the series of decisions that, I guess, staying steady is a decision, but the decisions that were made. So the Federal Reserve on Wednesday afternoon announced no change in their rate-setting policy and spoke once again to the competing risks of inflation and unemployment, and once again acknowledged that they could be faced with an event that challenges both of those two mandates, the higher unemployment as well as higher prices at the same time, and they tackled how they would handle that sort of thing in the off chance that it did occur. But big picture here, rates staying the same and acknowledging that maybe something to come for the second half of the year is kind of the hinting that they did, in my opinion.
Yeah, and I think ultimately it's it's something where I've said this before, and the more economic data we get, the more that I keep leaning in this direction, which is, hey, if you didn't have these tariffs and the uncertainty about inflation in place, I think the Fed might have started cutting Wednesday, or at the very least would have a very compelling case to start cutting at the July meeting.
Oh, you don't think it would have been earlier? I think without the threat of tariffs, I'm not sure that there would be. I feel as though there might have been some rate cuts already continuing at this stage.
I don't think so, and I guess the reason why I say that is, like, let's look at where we were heading into this year. There were no tariffs in place.
Yep.
And the Fed had done a 50 basis point cut in September, and then 25 bips at each of the next couple, and then in January paused before any tariffs were even known.
Right.
So I guess I look at the inflation piece there, and I say, okay, in January, or I guess let's look at the December data, because that's really what we're coming off of. So December, you had headline CPI at 289, you had core CPI at 321, headline PCE at 26, and core PCE at 286.
Yep.
So you go out and let's say, okay, let's look at the February data and see if March would have been in play. Headline CPI was still 282. Core was still at 314 at that point. It's not really convincing
Tough to
there.
cut then. Yep.
The PCE, headline still at 265. Core's at 292. So core had moved up into March. So you say, okay, that March meeting is off the table. Maybe they could, because by April, headline CPI 238, core at 278, okay. Core PCE at 252, headline at 215. Maybe they could have gone in May. But even there, you're looking at it in May, and you sit there and you go, okay, unemployment's at 4.2. Would we have had some of this weakening under the surface as far as hiring indications and things like that? I don't know. But if we're playing the whole counterfactual game, I don't know if we would have necessarily had that, and so
you also don't know if prices would have been even lower had this, non-tariff world existed. So yeah, it is tough to guess at, but I take your point that the Fed was on a pause before the announcement of tariffs. Maybe they would have kicked things off at the last or this meeting in terms of rate cuts without those tariffs existing, but it's not as though we would have been a percentage point lower on rates should tariffs not exist at this stage.
So I think that we're in a place where if you look at what the Fed did, let's look at the summary of economic projections, because this tells us what the Fed's thinking. They told us they expect GDP this year to come in at 1.4. In March, they thought it would come in at 1.7. In December of last year, they thought it would be 2.1. So they're saying, hey, the economy's continuing to slow based on what we're seeing. PCE inflation. Headline in December, they thought would be 2.5. In March, they thought it would be 2.7. Now they think it's going to be 3 for the full year. Core, they thought would go from 2.5 to 2.8 to 3.1. So both of those moving up about 0.5%. So pretty much what they're seeing in the trade-off is, nominal GDP is going to remain about the same, but more of it's going to go towards inflation rather than growth.
Yep.
Fed funds rate, they have not changed their projections at all for this year. It's been at 3.9 consistently, so basically saying, we might get 1 to 2 cuts by the end of the year. And the reason why, the unemployment rate, their projection in December was 4.3, their projection in March was 4.4, and their projection today is 4.5. So they're seeing, basically what they're telling you is, growth is going to slow a little bit more than we expect, inflation's going to pick up a touch, and unemployment's going to rise a little more than we expect. And if so, we feel comfortable cutting a couple times, and that's kind of where they are.
Yep.
So the question here is there's only one question now, and it's what does the data show the next few months? Because it's going to determine the entire ball game. This is it over the next few months. And then, quite honestly, if you haven't seen tariff-related inflation show up by September, it's not going to.
Right.
It's not going to. If you haven't seen layoffs in response to slower demand and trying to maintain margins taking place by September, not going to. At least not in terms of this cycle. Could there be something else that happens in January, February of next year? Sure, I buy that. Mm-hmm. But ultimately, if companies are really having to enter survival mode because of tariffs, a 5 to 6 month time horizon for it to do so, which is, by September-ish, like that's kind of enough to see what happens. Like, we've said this before, like, you can't just extend the soft landing thesis out forever and be like, well, they need to, unemployment can't rot. No, like, it has to be within a certain period. If you're not seeing economic weakness from tariffs within 6 months, I don't think you're going to. It could be something else, but it's not going to be from tariffs.
Right.
And so this is the whole ball game here, is what does the next 2 to 3 months of data show, and does labor continue to deteriorate? It is pretty much the big one that, is already, kind of that we're seeing in the data. But the one that we are waiting to see that hasn't shown up yet is, hey, when does tariff-related inflation print, and does it print? Because to this point, it hasn't at all.
Right.
So, in terms of what Powell said yesterday, and not yesterday, on Wednesday, I always just take notes as he's going through. These are some quotes from him. It takes time for tariffs to work their way through the chain to the end consumer. We expect to see goods inflation continuing to increase over the course of the summer. We want to make sure that a one-time inflation increase does not turn into an inflation problem. This is why they're not cutting today, is not because they think that they're inherently wrong right now, but because if you start cutting and juice demand, does that create inflation in other areas that then makes it non-transitory? Does it become sticky?
You would also just, I know they wouldn't say this out loud, but you look pretty foolish if you cut interest rates and then inflation shoots up 2 months later,
yes,
even if it ends up being transitory.
Correct. Other things, I thought this was a great. Someone asked him, like, what do you make sense of these projections? And he said, I would focus most on the near-term projections. It's really hard to know where anyone thinks the economy is going to be longer term. Basically saying, we're not looking at like 2 to 3 years from now. Don't pay attention to that. We're just trying to figure out what's happening in the next 6 months, which I thought was kind of an enlightening, little piece there. I thought that was interesting.
I'm not going to have this job 2 years from now anyway. Who cares?
That could be a kind of a tacit admission of that as well. Let's see.
I don't genuinely think that's what he's thinking.
No. Well, he may be thinking it, but, I mean, look, Jay knows he's not going to have this job a year from now.
Right.
Like, his term's up in May. He's going to be done. Whether or not, I don't think it's influencing his policy.
No.
But it's just, he doesn't have senioritis quite yet. Other things that we have here, this is another one just kind of along the same lines. We talked about a lot of different scenarios, some where inflation may not be at the level we see it at, or where hiring may be weaker than expected. So basically saying, hey, we are considering scenarios where tariffs could act as a deflationary force because the economy weakens enough that those higher prices can't actually gain hold. I thought that was interesting to hear.
Yeah.
And immediately after said, look, no one holds any of these views with a ton of conviction right now. So I thought that was kind of informative, too. They're really just watching to see what happens.
I find it interesting, too, that their base case scenario now is for growth to slow down at the same time that prices increase. And it has been for a while, but you take a look at how their projections have changed recently on GDP. It's, we expect the overall economic growth to slow down at the same time that we generally anticipate prices going up. And that's a pretty bad scenario to have. It doesn't mean recession, though. We're still talking about ultimately growth in the economy, just a lot slower growth than we had experienced over the last few years. But you don't like to see that growth slow down accompanied by a rise in prices.
Big thing, Fed's got a meeting on July 30th, and the next one after that, September 17th. So here's what I will say. July 30th, we are going to have another set of employment data, another set of CPI, PPI, PCE, all that stuff's going to be in there by then. And, basically another 5-6 weeks of jobless claims since now. If things start to weaken meaningfully before then, Fed can easily go 50 bips there, 50 bips. Like, they could basically do 50-50-50 for the rest of the year. And Fed funds rate goes from 425 to 450 down to 225 to 250. So they got to, and that's without any intra-meeting rate cuts or things like that. I mean, there's a lot of different stuff they can do.
you've got to, I would think, Chuck, that you have to be printing unemployment approaching 5% to see 2 percentage rate points of rate cuts by year end.
Basically, I think the way that unemployment typically works is, hey, once you hit a tipping point, it starts to rise quickly.
Right.
And so, like, that's what it would be. We're not there yet in the next, again, couple months. We're going to see if you see a shift in the labor market beyond what we've seen to this point, and that's what would get the Fed moving. So let's take a quick break here. We'll talk a little bit about, hey, Fed funds rate held steady yesterday, but why are you seeing things like credit card rates and mortgage rates moving up even with the Fed not doing anything? We'll touch on that when we return.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Summer in New England is nearly upon us. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but irrevocable trust can establish the kinds of safeguards you'll need to protect your assets long-term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit credit, or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Now's a great time to register for the DAV 5K taking place on Saturday, November 8th at Fort Independence on Castle Island. The race has sold out each of the past 4 years, and slots are continuing to fill up quickly, so don't delay. Visit dav5k.boston today and reserve your spot or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston.
Mike, we got a piece in CNBC. It's titled, "The Fed Held Interest Rates Steady, but Some Credit Cards APRs Keep Going Up. Here's Why." And the answer is not entirely surprising here. It's, look, if banks have concerns about higher default rates on credit cards, what they often end up doing is modifying terms of the agreements, after the fact. They can change, what the APR terms are. But also remember that if you are delinquent, oftentimes you end up having to pay higher interest rates on new credit cards that you're taking out because banks want protection from you defaulting.
Yeah, there's a few things going on here, right? There are some credit card issuers who are raising rates generally, but the data that we're referring to here is largely that the average rate paid is going up, and that can be better explained by people's worsening credit scores.
Sure.
Right.
Yep.
I mean, if you're applying for a new credit,
yeah.
if you're applying for a new credit card and you have now a terrible credit score because your student loan payments resumed and you didn't make payments, then you're going to be facing a higher score on that new card compared to somebody with excellent credit. And we've generally seen a deterioration in credit over the last couple of years here. And so I don't know how much of this is funny business on behalf of the banks, right? Yes, do banks.
How would you define funny business?
Issuing a credit card at a certain rate and then raising the rate subsequently after the fact without the Fed moving rates. I know they can, but it's a little bit funny business.
Yeah, it's a little. I mean,
it's not like they're not telling them. But
let's be completely honest. If you're someone who doesn't carry a balance on a card, typically, do you even look at the APR when you're signing up for it?
I do not.
No.
I'm looking purely at the benefits to me when I sign up for a credit card.
If you're someone who does carry a balance, your options for switching cards are often limited.
Yeah.
And the only thing that you're looking for is there something where there's like a balance transfer offer where it gets 0% for 6 months or something like that.
Right.
So I guess, look, this obviously, the Fed does not control credit card interest rates, and these can move. The other piece that they don't control that still remains hot these days, mortgage rates, which as of yesterday, according to Mortgage News Daily, the national average for 30-year fixed-rate mortgages still stood at 6.87. We've been in a really tight range for pretty much the last 2 months. So if you go back to April 7th, so kind of right after Liberation Day and right after we got past that initial drop in bond yields, on April 7th we were at 6.82. The lowest we got since then was 6.81 on April 28th, and the highest was 7.07. So we've been in a really tight 0.25% range for the last 2 months, and what we are seeing from housing right now is that based on the inventory builds that are out there and what we're starting to see in pricing, those rates are too high to hold pricing where it is.
Yes.
You're getting to the point now where home prices are sliding in not a majority of the country by geographic breakdown, not even a majority of the country by population breakdown, but prices are sliding in a majority of the country based on the number of housing deals that are closed in those different areas. What I mean by that, New York has a huge population, correct, Michael?
They do.
Big population. Is there a lot of housing activity in New York in general, relative to Florida, as an example?
No, not at the moment. There is just no building, just like the rest of the Northeast.
And so if you weight this based on transaction volume and not on population, what you are seeing is that the majority of the country right now is in the majority of housing stock is in areas that have falling prices, and that's going to expand as this year goes on. Our show's based out of the Northeast in New England. This is one of the only areas where that is not the case.
Right.
Inventories are still anywhere from like 30 to 70% of pre-pandemic levels, whereas if you look at Florida and Texas, you're now running 130 to 140% of pre-pandemic inventories, and a lot of other parts of the country are heading in that direction as you continue to see more listings, but people not being able to close on those deals. So I think from a mortgage perspective, mortgage rates, obviously the Fed doesn't control them. Even if the Fed starts cutting, it doesn't necessarily pass through directly into mortgage rates. So I think this is something that is going to become a bigger and bigger story as we go forward here. Let's take a quick break. When we come back, we got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Your Retirement Preparation Checklist. Mike, one of the items on this is to address outstanding debts, and by that, I don't think we mean pay everything off, but more make sure you have a plan for different types of debt.
Yeah, there's always been that real goal for I think a lot of retirees to have no mortgage when you get to retirement, and I still see people trying to accomplish that even if they might have a sub 3% mortgage, for example, and there can be some psychological benefit to paying off that piece of debt, but where it comes down to is prioritizing, hey, I might have a car loan, I might have a home equity line of credit, and while the mortgage could be the biggest payment, it shouldn't always be prioritized.
Beyond that, I also think it is something that you need to figure out how it fits into your monthly budget and whether you can continue to spend in the fashion that you've been spending, or do you have to make changes there?
Right. A lot of people use some rules of thumb when it comes to how much income they'll need in retirement, and those can be useful, but it all has to be customized to your individual plan. And the last thing you want to do is pay a whole bunch in taxes just to be able to pay down some debt that wasn't really a priority in the first place. And so definitely addressing your debt and knowing how to do that intelligently when you approach retirement is key and important.
The guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001. That number again is 800-393-4001, and the guide is titled Your Retirement Preparation Checklist.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are mixed right now at about 10:34. The Dow Jones is up 78 points, or 0.2%. The S&P 500 is up just 3 points, or 0.05%. The NASDAQ is down 21 points right now. Taking a look at some individual companies here, CarMax shares are up 4% after CarMax reported first quarter results that exceeded expectations. Earnings of $1.38 per share on revenue of $7.55 billion exceeded consensus of $1.16 in earnings per share and revenue of $7.52 billion. Darden Restaurants shares are up 2% after the Olive Garden's parent's fourth quarter earnings beat on both the top and bottom line. Adjusted earnings were $2.98 a share, topping expectations by 1 cent. Revenue was $3.27 billion, while the $3.26 billion was expected. Darden also authorized a new $1 billion share repurchase program. And finally, shares of Circle are up over 14% today as investors cheered the Senate approval of its proposed stablecoin legislation, the Genius Act. The stock was up 14% in pre-market trading after the bill passed the Senate on Tuesday. On Wednesday, it rose 33%. I am Ben Kitchen, and that was Wall Street Watch.
Mike, can we just talk a little bit about that whole stablecoin thing that's going on right now?
Yeah, let's jump in.
I want to touch on this just because I think this is going to be a big story for better or for worse over the next couple of years. So if you're not familiar with the idea of what a stable coin is, first of all, you're not alone. But the basic premise is, think of it in terms of it's the crypto equivalent or the crypto attempt to create a money market fund. Is that a fair way of describing it, Mike?
Yeah, except I think of a money market fund primarily as a savings vehicle, whereas a stable coin, I feel as though that's also being pushed as a transaction tool. Whereas
Sure.
a money market is primarily a savings tool. You don't use it with your debit card or anything like that.
Sure. So basically the premise is it's a cryptocurrency that attempts to hold a fixed value per token. In many cases, that fixed value that it attempts to hold is $1 per token, just like a money market fund attempts to hold a price of $1 per share. As we saw back in 2008, money market funds can have situations where the underlying collateral comes into question and they do not hold that value. It's what's known as breaking the buck. And so, that was a hard lesson for a lot of people to learn that, hey, money markets are not, the same as, actual cash. Likewise, stablecoins aren't necessarily. But the premise on this is that stablecoins, because they transact in, on a blockchain, in some cases you can have, faster transmission than you do in other situations, being able to process transactions instantly or pretty close to it instead of waiting for settlement over, a period of a day or two. Cross-national transactions can happen, yada, yada, and that's kind of the feeling on it. The hype is starting to get a little bit nuts. And what I mean by this is the company that went public about a week and a half ago by the name of Circle, their whole thing is that they run a stablecoin right now. And basically what it is, look, they have these stablecoins that are backed by different reserves, and they make money based on collecting interest off of what they hold versus not paying any of it out to their users. It's not all that different from how traditional banks make money.
And we all value banks at, 40 times, 50 times. The point that I think you're going to get to on some of this is there's some pretty wild valuations for something that operates a lot like a bank.
Not even wild valuations in something that operates like a bank. Something that operates like a bank without many barriers to entry. It's not that hard to go out and do this. And so what makes any one of these, unique, especially if we've heard, now the rumors that, hey, big retailers will want to get into launching their own stable coins and this and that. And by the way, some of this also starts to get towards pretty dangerous places, which is why, basically private currencies haven't really existed in the United States for the last 150, 140 years, is because they could be, if utilized improperly, a hugely destabilizing force that led to some tremendously awful swings in the state of the economy because of how they were handled back in, the late 1800s. But
which is probably why Congress is going to set up regulations that require these stable coins, I would think, to have collateral behind them that is similar to the regulations that govern other types of things that are looked at as a currency.
Yeah, I don't know enough about the specifics of the Genius Act to be able to say exactly what's in it from that perspective. We'll have to see.
Because otherwise it's going to be the Wild West, and it's going to be dangerous.
But here's what I can tell you about Circle, just as an example. They IPO'd at $31 a share. They're now at $226.
Okay.
This is not healthy for markets. And I'm not saying this to poo-poo anyone who might have made, a huge, win on this over the last couple weeks. But anytime you have companies that are in a completely new industry that no one really knows a ton about, that go up 7x in the span of their first 2 weeks of trading, that's typically not bullish for overall stock market conditions shortly after, just because this is when the fever breaks, it's not usually great. We've seen this a few times with new IPOs, and it's not to say that this won't be a successful company. I have no idea what they're going to do the next 5, 10, 20 years. But I think about the hype train on a number of, IPOs in recent history that have gone in similar fashion. And they've, a number of them fell on, tough times over the subsequent year or two, not for the company, but just for the stock price, because so much of it was just based on there's low float out there and everyone's trading the thing and everyone's trying to make a bunch of money. And then once the hype fades, okay, now where are the flows to support those prices?
Chuck, one of the threats, I think, to the U.S. dollar from crypto in general has been the idea that, hey, what if trade were conducted in different cryptocurrencies and it did not require as many companies and countries to hold dollars anymore, right? Is that fair to say that was a stated threat of the crypto industry?
Potentially, yeah.
I mean, one of the... I guess if the interest is now moving to these stable coins that are pegged to the U.S. dollar, that presumably the companies backing them would, at least if they were going to try and actually do this successfully, want to hold different forms of dollar-denominated assets. Does this help mitigate that potential risk? Is that why Congress is pushing the Genius Act and pushing for these stablecoins?
It's why Congress is saying that they're pushing it, but I'll be honest, I think that is a bunch of bull-loney.
Yeah.
And the reason why is, look, if you want something that is pegged to the dollar to begin with, aren't you transacting in dollars anyways?
Right.
If you want something that doesn't have, any kind of, know your client or anti-money laundering stuff attached to it, that's where you go looking for other stuff that you can circumvent the system with.
Right.
When you talk about, financing illicit trade and, all the stuff that is, the nasty underbelly of, the world economic system. This, I keep seeing all these things about, well, this is going to open up, a huge new market for, people to, basically buy U.S. Treasuries because what's backing these stable coins are very often like short-term U.S. Treasuries. To which I say, well, I'm not really sure that it is because those people that want something that is backed by U.S. Treasuries anyways are already seeking out dollars where they can. This is just changing the location of where they're buying these dollars. Like, let's say that you live in Argentina, Mike. And I have a good friend who is Argentinian.
Yes.
And, again, I've known the guy for 25 years, and it's basically like, everyone in Argentina knows that the Argentinian economy and the currency have been a joke historically. And so there obviously is always a very high demand for dollars, which turns out that dollars end up being priced a certain way. If all that happens is instead of going out and trying to buy physical dollars or dollars at banks that are, available through Forex windows and things like that, if they just go and start buying them through stable coins, it's not actually adding to the demand for dollars. It's just shifting around where they're trying to do that from.
Right.
And that's kind of where I come to on this, which is, no, I don't think that stable coins are going to unlock trillions of dollars in demand for, U.S. Treasuries and this and that. They're just going to pull it from one place, and it'll go down there, and it'll go up here, and it'll be net probably about the same. I don't really see it as hugely impactful in terms of demand for Treasuries. I do see it as being something where, hey, could it be something that starts to, change how we process payments and maybe speed things up?
Yeah, it could disrupt some major players out there in the banking industry that exist today.
So
hypothetically.
So we'll kind of see where things go. But I just find this is something that's kind of interesting to me just because we've been talking about crypto for what, Mike, like 10 years legitimately now?
Yeah, I mean.
And I keep saying, look, the idea of crypto is interesting, but show me the use cases for the average person. This is the first time there's even like some kind of halfway viable use case for the average person.
Yep. Other than speculation.
Right. Everything else is just speculation, which, look, it's fine. If you just want to be another, number in the Wall Street casino, that's cool. Like that. My whole life I work in the Wall Street casino, so like I'm not poo-pooing anyone who decides to make it that, but the promise of crypto was for something more, and if all it's going to be is number go up, number go down, okay, like that's fine, but eventually you got to prove some use cases. And maybe stable coins are a use case, but it's also kind of the most boring use case that you could have come up with for crypto.
Agreed.
Like, here's the Walmart stable coin.
Yes.
Great. Let's take a quick break. When we come back, we'll talk a little bit about tariffs and how they're affecting China's small parcel exporters.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Planning for retirement is much like cramming for a final exam, and no stone should be left unturned before you're ready to take that step. Hi, this is Chuck Zodda from the Armstrong Advisory Group, and we help folks just like you plan for retirement every day. Our new guide is called Your Retirement Planning Checklist, and in it, we'll remind you of the various issues that may be most important to your planning process. Let's start with the date you choose to retire. That'll depend on a variety of factors, including your income and your health. You may also want to modify your investment portfolio to create ways to maintain the wealth you've already
already earned, and you'll also want to make sure that you're prepared for major unexpected expenses. Life moves quickly, and you'll need to know if you can cover that cost. Call us today at 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Mike, we got a piece here from the Bloomberg. It's titled U.S. Tariff Spike Hits China's Small Parcels Squeezing Exporters. And basically what you're seeing is that a lot of the kind of upstarts in the really freaking cheap shipping business. Is that the technical term?
Really cheap goods.
Consumer goods
Consumer
that
goods.
could in no way be profitable businesses,
Yeah.
industry. Companies like Shine and Temu that sell a bunch of stuff made in China for prices that are insanely low.
Yes.
Were able to do so because of combination of two things. The first is generally, low tariffs on the imports of most Chinese goods, but beyond that, a de minimis exception that allowed for the import of goods priced below a certain price point to not have any tariffs applied anyways.
Right. So the way this stuff worked, Amazon is all about get me goods fast. I can generally find the same goods at a Walmart at a similar price, or at a CVS at a generally similar price, but I can order it on Amazon and it'll be in my house in some cases that afternoon. Shen and Tim were the exact opposite. It's get me something that does not have a name brand at 30% the price that I would see at Dick's Sporting Goods, for example. Both items might still be manufactured in China, but this one is going to be insanely cheap and not contain the name brand.
And pretty much the whole business model was just getting people who were, upset with prices everywhere else to buy this stuff and be comfortable waiting for it. And it ships directly from China, so it's not held in a U.S. warehouse. Comes directly from China, basically gets shipped right to you. And correct me if I'm wrong, Mike, but the return options are generally pretty not good or non-existent.
Never tried. I assume you are correct about that.
I haven't even gone to the websites, quite honestly, just because I don't want them to track me. I was thinking about it in the run-up to this piece, and I'm like, no, I don't want them to know that I exist, at least in the form of someone who might buy stuff eventually. But with the shift in tariff policy this year, a couple things have happened. Tariffs on Chinese goods have increased, and the de minimis exception is gone as well. And so those parcels now face tariffs as high as 54%. And so you've had these companies raise prices. And so obviously when you raise prices meaningfully, sales tend to drop meaningfully, and that's kind of what we've seen here.
Yeah, 40% plunge from the same month last year in sales. For companies like Shen, the value of small parcels sent from China to U.S. fell by over $1 billion in May, and that's a 40% drop. So this is not shocking. I think when you have the combination of the insert of tariffs plus just the attention that's been put on these types of companies, and you're kind of unsurprised by the results.
Summer in New England is here. Literally, today. It's the first day of summer. The kids are home from school, the sun doesn't set until after 8, and it's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Mike, do you want to talk more about Israel-Iran, or do you want to talk about Masayoshi Son's most recent artificial intelligence pitch?
The first is going to be sadder, the latter is going to be more entertaining. Let's go with Son.
Let's go with Son. We can cover Israel-Iran. There's going to be plenty to cover there. So, Masayoshi Son, who runs SoftBank Group, and generally has some of the most unintentionally comedic PowerPoint slides in history, like literally using things like unicorns and rainbows, is talking about trying to build a $1 trillion U.S. AI hub somewhere.
Probably Arizona.
And what's interesting about this, so probably Arizona is what he's talking about, which I always find it interesting that they're trying to build semiconductor facilities in Arizona because you need a ton of water in order to make semiconductors, but it's neither here nor there. But here's the thing about Son. Historically, his two things. His dreams have kind of outpaced his reach and ability to actually execute them, and his entrance into a number of areas has often marked kind of
the top,
the peak. So I find it interesting that he's talking about, we're going to try to do this $1 trillion, semiconductor investment hub. And when I start seeing that, I start finally thinking to myself, man, are we kind of at the peak of the hype cycle, and is it starting to crest?
It's so unspecific, too.
That's what he does.
Production lines for AI-powered industrial robots.
So here, what I will say,
not saying we don't need AI-powered industrial robots. I just that's a broad category, my friend.
And I got to tell you, so this is a huge throwaway line for the end of an hour of a show. But man, the more I read, the more I think that the AI-powered industrial robots are coming way sooner than any of us think. And I've been really skeptical since I got burnt on self-driving cars, but this, I'm seeing something here. Quick break. We got more coming up in just a bit.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Summer in New England is nearly upon us. The kids are home from school, the sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80 you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I get $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Ben with you, and we got stocks in somewhat mixed territory at the moment, with the Dow Jones Industrial Average holding just above where it closed on Wednesday, up 28 points right now, about 0.1%. The S&P 500, which was up around 30 points shortly after the open, now down 15, so about a 0.75% reversal. And this being dragged entirely by the NASDAQ, which is now down almost 0.2%, about 135 points. And the only news that I have on this, and this basically came out at the same time, so I think you can point in a pretty straight line on this, but the Wall Street Journal reporting that the U.S. is preparing action targeting chip plants in China, not militarily, but specifically talking about an export control crackdown where the U.S. is seeking to revoke waivers for Samsung, SK Hynix, and Taiwan Semi that allow them to use U.S. tech in Chinese factories without case-by-case licenses. So, obviously, the place that we're going to go on this then is, okay, does this shift in posture from the U.S. mean that China is going to say, okay, fine, you want to do this, no more rare earths for you? But this is kind of, I think we're just going to go round and round on this for a little bit, just because I don't think China's just going to be, happy and okay with, what the U.S. tries to do here. So that's what we've got moving the equity markets right now. Bonds 10-year Treasury up 1 basis point to 4.405%. Not much movement there. We've got the national average for 30-year fixed-rate mortgages at 6.87%. That's been in a tight range for the last 2 months, between 6.82 and 7.07, so not really any movement in either direction on mortgage rates. Oil, West Texas Intermediate, up another 12 cents a barrel to 75.26. And unfortunately, about a month or so ago, I made the point that, hey, oil, gas prices hadn't been moving, so I'm not saying anything on them until they move either below 310 or above 320. The unfortunate thing is, according to the AAA national average for gas prices, we're now up to 321 and 7/10. That's up about 10 cents a gallon in the last week now. And based on the projections that I've seen from people in the industry, looks like we still might have anywhere from another 5 to 15 cents to go, depending on exactly how prices move here, but probably getting into that 325 to 335 a gallon range nationally as we head into basically like peak driving season right around 4th of July. So we'll obviously have to pay close attention to what's going on in the Middle East, as any type of ceasefire has the potential to move those prices back down into the 310 range. If we see an escalation in the coming weeks, you've got the potential for gas prices heading north of 350 in a pretty quick hurry, and so we'll see where we go. I do not know what is coming next. They do not involve me in either the military planning nor the nuclear negotiations. I've tried to get in. They won't let me into the group chats, but we'll see. We'll see what happens there.
The reporting from the Wall Street Journal, Chuck, I find this one paragraph interesting. The chip makers would likely seek case-by-case licenses from the U.S. government to supply their Chinese factories while looking to replace U.S. equipment with alternatives from Japan and Europe. This setup that is at least being reported on by the Wall Street Journal can either be looked at as an escalation and very likely will be by the Chinese. From the U.S. side, it sounds remarkably similar to the process that the Chinese set up on the export of rare earth materials. We're going to create this new oversight board. Everyone's going to have to apply case-by-case basis, and we're going to decide whether or not we approve the exports. And so I think you're right that we're going to be kind of circling all of this back and forth with the Chinese in terms of escalation, meet in London or Geneva, resolve some of this stuff, and and then escalate again, which is where we are today, at least.
By the way, you're looking at that piece in the Wall Street Journal?
I am, yeah.
The header graphic for it is this Taiwan semiconductor facility in Nanjing, China. Doesn't it look freaking cool?
Yeah, I hesitate to compliment the Chinese too much, but it's a really cool looking facility that's sitting out over what's probably a very polluted body of water. But yeah, it looks pretty spaceship futuristic.
The thing just looks cool. I'm not saying anything beyond that, but it looks cool.
Yeah,
it does.
Very futuristic looking.
Yeah, it's on stilts, which I don't know why.
Looks like it's about to take off. Quite honestly.
It does. It looks like the thing might just, fly away sometime. But anyways, let's talk a little bit about Social Security. It's our top story for the hour. And looking at what we have here, piece in the New York Times, Social Security's finances erode further, risking benefit cuts. The reason it's our top story is that the Social Security Administration conducts an annual review where they say, okay, here are the projections for the Social Security Trust Fund, and here is what we think is going to happen, and here's how benefits could be impacted. And they came out with that update. Was it late Wednesday or was it yesterday? I can't remember when I saw it.
I think I heard it Wednesday. Yeah, I think I heard it Wednesday.
Here is what they are saying, is that the Social Security Old Age and Survivors Insurance Trust Fund is on schedule to be depleted in 2033. That is a year earlier than they had previously projected. And, Mike, I did the math, stayed up all last night doing it. It's 8 years from now.
So it makes it very likely that the next elected president will oversee the depletion of the trust fund and need to reform it.
Maybe.
I mean, given that most presidents that are elected get a second term, that's kind of where I'm going.
Unless they do a really bad job.
Yep.
And then you only get one.
Yep.
In which case, I still believe the 2032 election might be the first one in American history that no one wants to win. Because you got to fix this then.
And you can be rest assured that it won't get fixed until right around then.
Right. It'll be Christmas of 2020 of 2032, and we're going to be sitting around like,
still
they
talking
could do
about
this or they could do that. But
just a reminder on something that we bring up every time. That is the dumbest way to fix this, because if you wait until 2032, the measures you have to take to fix the problem are much more severe than what you could do today by fixing the problem.
Yes. And the reason why the trust fund is going to be depleted a year earlier than expected is because of
Democrats stealing from it, Republicans stealing from it?
No,
neither.
The Social Security Fairness Act, which pays a bunch of public sector workers that previously had pension offset language in their Social Security claims, it basically undoes that, and now they can claim, higher Social Security, which is basically the exact opposite reason that the WEP and things like that were put in back in the 80s.
Correct.
Was in order to make the program more sustainable. This, whether you say it's right, wrong, or whatever, effectively, if all you're doing is paying out more benefits but not fixing the input side of the equation, you're not making the program more sustainable. And this is a great, great symbolic gesture that basically is everything that's going on in American finances right now.
I love that the only bills that get bipartisan support are the ones that run up unfunded deficits.
Yes. So here's what this means. Look, if you are 59 years old today and you're going to hit full retirement age 67 in 2033, you will only get 77% of your Social Security payment if nothing changes.
If nothing changes are a massive caveat here, folks.
Right, and Mike and I are both on record that, hey, generally it's bad policy to screw people over right as you enter retirement for two reasons. One, the people end up upset, and two, they're retired, which means they have a ton of time to vote against you in the upcoming elections.
Or protest against you, both.
Either one, So generally it's not a great thing to upset 67-year-olds, which is also why we've been conducting just massive wealth transfers to baby boomers for the last decade now, which you're welcome, again. But I think that when we look at this, Mike and I are both of the opinion, hey, it's really unlikely that you see just a straight-up benefit cut in 2033. How we fix this is likely a combination of higher taxes, lower benefits over time, maybe some means testing of the program, things along those lines. But the idea that, hey, you've been paying into the system and here's, a 23% haircut relative to what you thought you were going to be getting, I don't think Mike and I really think that that's reasonable. But I acknowledge, hey, it's a remote possibility that you have to at least consider. But is that the reason to claim Social Security at age 62? Probably not, because if it doesn't happen that way, now you've screwed yourself for the remainder of your retirement for something that didn't happen.
Faux life. I have to say, Chuck, I agree with you on the first point there that we are unlikely to get those cuts. I'm starting to come around to the idea.
We're just going to deficit it out, huh?
Yeah, I'm starting to come around to the idea that we're not actually going to fix the problem. We're just going to spend the money.
We're just going to change the rules and say it's now okay to pay out 100% even if it adds to deficits.
I think that's only a slight majority of where I think we'll go, but I see no evidence anywhere in the last 25 years that our elected officials are willing to make difficult decisions about cutting benefits and raising taxes. I hesitate to think of actually a single scenario where both of those things have been done at the same time. You've had limited instances where they have cut benefits. You've had limited instances where they raise benefits and raise taxes, Obamacare. I've seen no evidence anywhere since, I think, Bush, since pre-Bush, where they have raised taxes and cut benefits at the same time. And that's what you need to do to fix Social Security. I could be wrong. Tell me if I'm wrong, anybody, but I don't think I'm wrong. So, yeah, I think they just spend the money. Which is a dumb solution.
The closest thing that we've seen to cutting benefits in Social Security is, just changing some of the programs and stuff. Like you can't do the file and suspend anymore.
Yeah.
You can't. The one that I always loved, you can collect your Social Security, invest it for 8 years, pay it back, and move up to the higher threshold.
Right.
Which, admittedly, like the only people that could do that were the people that didn't need it to live off of.
Right.
So it's kind of like, okay, I understand why they did away with that, even though, I got to say, really cool idea, right?
Yeah.
But
yeah.
you can obviously
great for hedge fund billionaires.
You can obviously see why they don't let you do that anymore is because if you really needed your Social Security, you wouldn't just be able to pay it all back and move up to a higher benefit.
Right.
Let's take a quick break here. When we come back, we are going to... We doing trivia? Is that next?
We are doing trivia.
Yeah.
That's what's next.
We'll do trivia, and then we'll talk about auto prices as well.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Preparing for retirement is a time-consuming and challenging process. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're at the point where you can see retirement approaching, now is the time to make sure your plan covers all the bases. Our new guide is called Your Retirement Preparation Checklist, and it discusses a variety of important topics as you make decisions for later life. Everything from reviewing your income sources so that you have a full understanding of how much money you'll need in retirement, to addressing any outstanding debt, which may lessen your overall financial burden. Planning for retirement takes a great deal of time and effort, and this new guide is designed to offer you the guidance you may need. Call us at 800-393-4001 and request your free guide today. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets is your most important financial responsibility, and irrevocable trusts can help. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Summer in New England is nearly upon us. The kids are home from school, the sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Time now for trivia on the Financial Exchange. Well, 50 years ago today, the first summer blockbuster movie hit theaters across the country. The movie in question was a massive success, earning over $100 million in the U.S. alone, which was a record at the time, and adding an additional $450 million worldwide. So today's question is, what was the first summer blockbuster movie? What was the first summer blockbuster movie? Be the fourth person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. The fourth correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Mike, one of the pieces that we have to work with on the tariff puzzle are the auto tariffs that are in place. And the estimates that I've seen, and this one kind of points in that direction as well, are that, hey, once these, are basically in full effect and you're through that, pre-imported supply and you're seeing these auto parts tariffs in place, the expectation is that this is going to push the average cost of a vehicle up by somewhere in the ballpark of around $1,700 per car.
What's the average purchase price of a vehicle in the U.S. now? Are we up over 50
About
grand?
$48,000.
Okay.
So this has the potential to push it above there. So you're talking about a 3.5% to 4% jump in car prices. The average, as a result, it's not going to be for every car, though.
Sure. This is very obviously damaging and challenging for American consumers. It does not account for how much new steel, aluminum, potentially gets manufactured in the United States in the future, or other items, and all else equal, right? We've got other issues with car manufacturing. I guess my big question is, Americans' viewpoint of car pricing so distorted based on how we buy them that this is very noticeable to them?
Talk to me about that.
So I bought a car, as you know, a few weeks ago now. Go through the price, go through everything, ready to go. When I'm ready to go, they do not bring out anything when it comes to the price of the vehicle. Instead, they bring out the financing options. No interest rates attached to them at all, by the way, because they have not yet run my credit at this point.
Sure.
And they just show me, okay, here's your monthly payment given a down payment of $2,000, $5,000, and $10,000 if you want to do a 48, 60, or 72-month car loan. And nowhere in there do I see the end price of the vehicle listed at all. And so it's kind of tough to pick out a $2,000 or $1,700 price increase when the majority of Americans are buying their cars in this fashion.
So let's do this out this way then. Would it be noticeable for the average American buying a new car? And remember, the average American buying a new car is not an average American. The ones who are buying new cars tend to be wealthier.
Yep.
And it's you I always say, like, you know, we make fun of, you know, like Americans on average pay like X dollars for new cars. Like, how can we do that? The fact is, most Americans aren't because they can't.
Right.
But the ones who do, okay, they bring out the financing options. And generally, like, the standard at this point, I wish it weren't this way, but the standard is a 60-month car loan, 5 years. If you're adding $30 a month to that, does that affect how the average American buys cars?
It should. I'm not sure it does. I don't know.
Right, exactly. Now, here's the thing. I have had, like, the when people are negotiating on houses, as an example, and, like, someone's like, well, you know, they want $425 and I only want to pay $420, like, they won't meet me in the middle. My advice is very often, like, just do, if you like the house, just do it, because it's like an extra $10 a month for 30 years. To live where you want. Like, that $10 a month isn't going to make the difference. In this case, for a car, which is a depreciating asset that you're going to own, again, like, depends on the person buying it. There's some people who buy new cars that get a new one like every 3 years. There's some who will hold this thing for 15 years. But you look at it and you go, can I on this car pay an extra $30 a month? I can. And so here's, I guess, where I land, which is Americans might not change their car buying behavior as a result of it. They might still buy the car, but they're going to have less money to spend elsewhere.
Yeah. Right.
That's kind of where I end up landing is, yeah, there's going to be less money to go other places then, because I'm not sure that, again, with how Americans buy cars, that makes a difference. What percentage of people, like, walk up and are like, hey, I'm going to write you a check for that car?
Very few.
You know?
By the
Even
way,
Bezos probably leases.
Scary statistic for you, Chuck. According to LendingTree, the average auto loan term for new cars is 68.6 months now.
Which is not good.
Nope.
Which is not good.
It's the average.
The framework that I've always liked on buying cars, if the price is more than 10% of your income, probably shouldn't be doing it.
Quick break. Wall Street Watch is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but a revocable trust can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Your Retirement Preparation Checklist. One of the items on that list, reviewing your investment portfolio. And Mike, I think one of the biggest mistakes I see people make is making no changes to their investment portfolio right up until the minute they retire and then making a drastic shift.
Yeah, I mean, look, that drastic shift can sometimes be called for, but only if the preparation hasn't been happening over the years. And that's where having a checklist in place and really addressing these things well ahead of retirement is the most comprehensive strategy and probably the best planned strategy that you can have out there.
And when we talk about an asset allocation in retirement, it's not just, hey, I'm X years old, I need to be, situated in a certain fashion. It's much more taking into account your income needs over different time horizons, any other big spending items that you might have, and obviously risk tolerance and time horizon for retirement. Big difference between retiring at 60 and retiring at 70.
Well, and the tools can change too, right? Even if you were in a tool that made you automatically more defensive as you got closer to retirement, like many 401ks do, it might not be the best distribution tool for you when you're actually ready to pull that trigger, stop working, and then ultimately begin taking withdrawals out of that 401k. And so really important to review this piece by piece.
Our guide this month is titled Your Retirement Preparation Checklist, and the way to request it is by calling 800-393-4001. Again, the guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, it's 11:34, and markets are mixed right now. The Dow Jones is up over 121 points, or 0.3%. The S&P 500 is essentially flat, up 1.21 points. The Nasdaq is down over 60 points, or 0.3%. Jack in the Box shares have fallen 1.8% after a Stifel downgrade to hold from buy. The firm said the Trump administration's immigration policies are a headwind for Jack in the Box. Accenture shares are down 5.5% after the IT company reported a 6% drop in new bookings in U.S. currency in its fiscal third quarter to $17.73 billion. Overall, however, Accenture topped expectations, posting earnings of $3.49 per share on revenue of $17.73 billion. Analysts had expected per-share earnings of $3.32 on revenue of $17.3 billion. Specialty building products company GMS stock is up over 27% as a bidding war for GMS has reportedly developed between QXO and Home Depot. QXO said late Wednesday that it was offering $92.20 per share, while the Wall Street Journal reported Friday that Home Depot had also made an offer privately. And finally, we're looking at Kroger shares are up over 9% after the company raised its full-year sales forecast, held its profit outlook steady, and posted results for its most recent quarter that were mixed. The company is navigating an increasingly competitive environment with Walmart and Costco gaining share in grocery. I am Ben Kitchen, and that is Wall Street Watch, taking a look at trivia right now. The question was, what was the first summer blockbuster movie? Your answer? Jaws. Jaws shifted the focus of Hollywood to releasing big-budget films during the summer, targeting a wider audience and generating significant revenue. Today's winner is Kathy in South Weymouth. She will be taking home a Financial Exchange Show t-shirt. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, did you tell me, or am I making it up, that you rode in a Waymo in the last year?
I've done it a few times, actually. I was on business in both San Francisco and Phoenix over the course of the last year. And so, yeah, I've taken 3 or 4 of them now.
Where do you call them through? What is there?
You have to have a
app?
dedicated app. Yep, you have a dedicated Waymo app on your phone. You, at least in the cities that I visited, cannot call them on any other apps. I think that they might have integrated with Uber in Austin, but I could be wrong about that. But yeah, you have a dedicated Waymo app, just like Uber or Lyft, and you use that to call them.
So Waymo is sending its cars back to Manhattan beginning next month. They were in there through 2021. Just conducting mapping of the area. Now, you might say, like, why do you need a map of New York City? It's not that kind of mapping. It's, the actual, like, street by street, how much room do we have to maneuver the cars mapping. So they're going to be back doing that, and also they will have human drivers just because New York State law doesn't allow for vehicles to operate without a person at the wheel. Waymo's obviously pushing for changes to that. But they are trying to, potentially get back into what is obviously a huge area for ride-hailing. And the big question, it's interesting, because on one level you think about New York City and you're like, man, what a perfect spot for these vehicles. The counterpoint to it is, unlike other grid-based metro areas, Phoenix is one that you mentioned.
Sure.
New York City is constantly evolving in that, like, the number of, like, street closures and, this whole lane's closed because, there's, like, something happening here and the guy loading a couch into his penthouse, so we've got this road blocked off. That stuff happens at a pretty high rate in New York City, and so it does face some additional challenges in navigating the specifics of the roads, but the overall grid makes it, more manageable. But there's just, like, the fact that it's New York City and weird stuff happens there that you have to deal with.
Yeah, I think the only challenge when I think about New York is weather. Quite honestly, like, seeing these things operate in Phoenix and San Francisco, one, they're not going to take the entire island of Manhattan. Or at least not at once. They carve out a section of the city where they say, this is where we're going to operate. And so do I really think that you have, on a per-mile basis, more distractions and disruptions than you would in San Francisco? No, I kind of have my doubts. What you do have is fewer days of clear sunshine than you would get in San Francisco or Phoenix. And so are these systems really ready for go time when a good portion of the days are at least rain and oftentimes other weather conditions? But, again, it's New York. You're not dealing with snow in the same way that you would be Portland, Maine, for example. And so, I don't know, New York seems doable if they can get the rules behind them on it, to me.
Yeah, what you got to deal with in New York, it's the brown sludge the day after it snows.
Yeah.
That just covers the entire city.
Yep. Yeah, so you don't have that in San Francisco. I can agree there. Folks, I want to talk to you about the new guide from Armstrong Advisory Group for the month of June. This one, we talk about this subject pretty frequently, but there are different phases of life when I think a financial advisor can really add a lot of value, and one of the crucial ones is when approaching retirement. And so this new guide that we put together puts together a checklist for you. And, it is not something that can guide you to whether or not you can retire, but we put together this checklist of items that you really need to consider and make sure you've got a firm grasp on before you sit down and make that conclusive decision as to when you can retire. If you're considering meeting with a financial planner, if you're considering sitting down with one you already have or interviewing one, I find this to be a really useful checklist to sit down and say, okay, if I've got these things in order, I can at least review these different people and really get an understanding for what I'm looking for when it comes to my personal retirement. Again, it's Your Retirement Checklist, our new guide from the Armstrong Advisory Group. You can get your copy by calling us at 800-393-4001. The guide's also available online at armstrongadvisory.com, but that phone number to talk to a real-life human being, get a copy of your guide, and we do have offices located throughout New England from Portland, Maine, down to Wallingford, Connecticut. We'd be happy to chat with you about those next steps, but the number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, I want to pull forward this piece on Japanese inflation because I think there's something it's not even brewing there at this point. It's brewed and continuing to brew. It might be over brewing at this point. But so you've got Japanese inflation running hot at the moment. Japan's core inflation rate that was reported overnight climbed to 3.7% year over year. And that is obviously core is stripping out food prices. Headline inflation actually came in at 3.5, a little below, and this is all happening with a backdrop of rice prices in Japan now up 101.7% year over year. That is their largest increase in over half a century. And I know next to nothing about the Japanese rice market, so everything that you're about to hear from me I learned this morning, which is fine. But interestingly, so the Japanese rice market is basically cut off from the rest of the world. They don't really allow for much in the way of imports. They don't have much in the way of exports. And so it becomes a very fragile market because you don't have, this big network of suppliers that you can choose from. And so when things get disrupted there, apparently it just is an incredibly volatile market where you can just see these huge swings depending on exactly how things move. But
if, for example, the orange crop in Florida fails, prices go up, but it is not as catastrophic as the rice market in Japan, is what you're saying.
Correct. We might be like, okay, bring in, as many Costa Rican oranges as you can, or,
sure.
Bring in as many Panamanian oranges as you can, and we'll figure it out. It's not the same with Japan and rice. And so the piece that you're really struggling with here is the Bank of Japan is just kind of pinned in right now and doesn't have any easy ways out of this. What they are talking about trying to do, because they can't find buyers for their long-term bonds, is they are talking about trying to shift the issuance more towards the short end where people may be, more amenable to buying. But it doesn't actually solve the inflation problem. It just allows you to place your debt right now. And the thing I come back to, the U.S. has done some of this in the last year or two as well, not to this extent, but I was reminded by a friend of mine that back in the 1990s, there was a period where 99% of Brazil's borrowing was being done on a 3 to 6 month basis.
Ooh.
Because no one wanted to buy long-term Brazilian bonds because of the inflation problem. And ultimately, it doesn't solve it. It just kind of pushes it out and means that, yeah, we've got this huge inflation problem, and maybe you can inflate your old debt problems away through that while, repressing your, country's population through high inflation. But this, unfortunately, I think is an ugly thing that we're going to be seeing more and more of. And none of this ends well. Eventually it ends with something breaking because people do not like high inflation, and just moving around the maturities of your bond issuance in order to solve it is not actually fixing the problem. And the problem that you have is that in order to historically fix inflation, you need to do the opposite of what you're doing and basically raise rates and allow for that inflation to be beaten into submission. But no one likes to do that because then it triggers a recession, and those are obviously unpalatable as well. So I think that we are in some dodgy times for a number of countries dealing with inflation problems. And what I will say on this front, pay attention to Japan, because there is no, aside from the U.S. dollar, there is no more important currency for world financial markets than the yen. So pay attention to what's going on there, even if you don't normally do so. Quick break here. When we return, we're going to be joined by Paul LaMonica from Barron's right after this.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Protecting your assets is your most important financial responsibility, and irrevocable trusts can help. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer in New England is nearly upon us. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com. The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
As promised, joining us on the line right now is Paul LaMonica from Barron's. And, Paul, it's great to chat with you today.
Thank you very much. Appreciate it.
Paul, when we look at this piece that you have out there today, it's talking about credit card annual fees going up. What are we seeing in the landscape as far as the magnitude of annual fee increases?
Yeah, there's, what we have right now is that Chase with its Sapphire card, they're going to be going up, to a pretty hefty annual fee from where they were. And, that's something that, they are talking about it being, good for customers because there's a lot more features that they are going to be having. But the Sapphire Reserve credit card had an annual fee of $550. It's going up to $795. When they first launched it almost a decade ago, it was at $450. Now again, they're promising more access to airport lounges and better points boosting program and promotional credits with a lot of partners like Apple and DoorDash. But this is coming at a time where there's speculation that you could have American Express raising its annual fee potentially to $1,000 for platinum cards. So the question is, what does this mean for Capital One? They have their Venture X program, which is quote unquote only at $395. If they hold that steady, then maybe they'll be able to gain some market share from the likes of JP Morgan and Amex. And, obviously Capital One is, a company that has done really well in recent years. They just finished the merger with Discover, which they're hoping will boost profits as well.
When you look at these annual fees, how much of corporate revenue does this make up for all of these companies? Is this a big line item for them, or is this just something that kind of gets people into the ecosystem and the real stuff is made elsewhere?
Yeah, it's really more the latter. I mean, these are all three very diversified, giant financial services companies: Capital One, JP Morgan Chase, American Express. JP Morgan probably the most diversified of the three because of the Wall Street ties, the investment banking business they have, in addition to the consumer banking business as well. But yes, these are companies that all do want to keep people within their, quote unquote, walled gardens. And I think Capital One even more so because of the Discover deal, giving them more of a competitive, presence versus the other payment giants, of course, Visa and MasterCard, as well as American Express. So I think for Capital One, it really might behoove them to, keep their annual membership fee a little bit lower to try and gain, even more market share.
Paul, these are all, kind of upper tier credit cards that you're talking about raising these fees. Are we seeing fees going up on mid-tier and lower tier ones as well, or is this just isolated to those premium cards at the moment?
Yeah, I think that the headlines are more about the premium cards than your average standard credit cards, which, these companies all offer, quote unquote, lower end cards as well. But I think this is definitely a case where companies like JP Morgan Chase, Visa, and Amex and Capital One recognize that there are higher end consumers, more affluent customers at the upper end of the income chain that can afford and absorb these costs a little bit more than lower income consumers relying on credit cards for spending. You're not really going to try and squeeze them at a time where rates are already probably high for a lot of these credit cards. Not to mention just the annual fees as well. A lot of lower end credit cards don't have the same annual fees as well because they're not offering these same perks.
Paul, at a time when everyone is focused on inflation, is this kind of a dangerous time for companies to be raising these annual fees?
It is questionable whether or not you will see consumers balk. I think the bet is that once you have one of these cards, switching may not be easy to do, or it might be kind of a pain to do because you're already locked in with points, especially when they're tied to travel rewards, be it airlines or hotels. So, I think that's the bet, that maybe consumers are not going to leave even if they are seeing higher prices. It's kind of similar strategy to what you're maybe getting with Netflix and some of the streaming companies where, they're raising prices. But if you like watching certain shows that are only on these platforms, what are you going to do? You can't say, oh, well, Netflix just raised their fee and I like watching Squid Game, so I'll go to Disney Plus instead, which doesn't let me watch Squid Game. So,
Paul, we've got to run. Appreciate you joining us. Have a great weekend, and we'll catch up with you soon. That is Paul LaMonica from Barron's. We're done for the week, everyone. Enjoy the weekend. We'll see you back here on Monday.